Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 67 of the Tax Relief with Timalyn Bowens podcast. Today's episode is pretty special and unique. You will notice if you are a regular listener of the podcast, all 66 episodes prior to this have been audio only, with a few exceptions where we have some video. Today's podcast episode is actually going to have a visual component as well. So if you're listening on Spotify, Apple Music, Amazon, Audible, wherever you listen to the podcast, I want to encourage you to go visit my YouTube channel. The link is going to be right in the show notes because you can actually see me talking to you today. And I want you to be able to look me in the eyeballs and know that I am sharing this content with the most sincerity. Here's why. We're continuing our series about the One Big Beautiful Bill Act, right? And we've covered the no tax on overtime, the no tax on tips. Last episode, we talked about the car loan interest, but today we're going to cover a topic that's near and dear to my heart. We're going to be talking about the enhanced senior deduction. So if you're a senior citizen or you have a senior citizen that is near and dear to your heart, this episode is for you. Because I can't even begin to tell you how many times I've seen senior citizens be taken advantage of financially, okay? Also, if you aren't familiar, my favorite people in the whole wide world were my grandparents. So I can't even imagine if all of this different tax information was going out right now and they were still here. I would want somebody to break it down for them in a way that they could understand it and carry on conversations with the financial advisors that they had in their life. Okay. So that's what I intend to do today in this episode. We're going to break down what is the senior enhanced deduction, who qualifies for this deduction, and the impact that it will actually have on the tax return. Okay. So we know the One Big Beautiful Bill Act was passed July 4th, and it was crazy because typically when we see something passed, it's for future years. This bill is going to affect this tax year, 2025, and then have things that expire in 2028. This specific piece of the bill is no different. So we have an enhanced senior deduction that is going to be effective for tax years 2025 through 2028. Just as a reminder, when President Trump signed this into law, it is by design. The 2028 tax return will be filed in 2029. So the benefits of this, people are going to realize that they're gone in 2030 when they go to file the 2029 return. And guess who will no longer be in office, right? So whoever is in the Oval Office at that time will be holding the bag. It will be up to them to extend this deduction or to let it sunset. So let's get into how it's going to affect you right here and right now, though. So with this enhanced senior deduction, there's been a lot of misconception. During the campaign, this was the third campaign of President Trump, one of the things that was going around was no tax on Social Security. I want to be very clear. Social Security is still taxable income. The amount that is taxed or whether or not you have to pay taxes on any of it is based on provisional income. Now, I've talked about that in previous episodes with retirement and taxes. So I'll link that below and not spend too much time on it here. With senior citizens who are 65 and up, they already have a little boost in the standard deduction. let me give you an example. And I have notes here because you guys know I get excited about taxes and go on a tangent. For this year, 2025, the standard deduction for single individuals is $15,750. But check this out. If the taxpayer is 65 years old or older and they're single or head of household, they get an additional $2,000 that they get to deduct from their taxable income. Okay, that's just the standard. If they itemize, of course, is going to be above that. Now, if we have somebody who is head of household, maybe they're raising their grandchildren, right? That standard deduction is going to be $23,625. Let me go back, because head of household could also be a disabled child, right? Who they are the primary caretaker for. There are a lot of different scenarios where a person could be head of household. Okay. Not going into it in this episode, but for a person who is head of household, we have a standard deduction of $23,625 for the 2025 tax year. Now, for them, they're going to add an additional $2,000 as well if they're 65 or older. But for our people who are married filing jointly, we have a standard deduction of $31,500. And if they're 65 and up, they're going to add an additional $1,600. So that's just across the board if they're 65 and up. The enhanced senior deduction is going to add an additional $6,000 for each qualifying taxpayer that is over the age of 65, or I should say over 64. Because here's the thing. If the taxpayer has reached the age of 65 before the tax year is over, then by age, they are qualified to take advantage of this deduction. So if your mother or father has a December 31st birthday and they're going to be 65 this year, December 31st of 2025, by age, they're eligible to take advantage of the additional 6,000%, or I'm sorry, not 6,000%, $6,000. So let's say, right, that they're 64, they have a December 31st birthday, they're single. Right now, we're looking at $15,750 for their single standard deduction. But because they're turning 65 on December 31st, they're going to get that bump of $2,000. So now their standard deduction is going to be $17,750. Happy birthday, right? But under the One Big Beautiful Bill Act, if they meet all other criteria, not only are they going to get that $2,000, they're going to get that additional $6,000. So instead of the $17,750, we're looking at $23,750. Now, keep in mind, a deduction is going to reduce the amount of taxable income. It's not going to reduce the amount of a liability dollar for dollar, okay? A deduction just means you're getting taxed on less money, less income. So I said there was other criteria to meet, right? What they did with the One Big Beautiful Bill Act is they said, okay, we want to put this in here to help seniors, but like with most deductions or credits, there is going to be an income threshold. So this is going to help a lot of the taxpayers, senior taxpayers who are most financially vulnerable, right? I definitely have some senior citizens that this is going to be a blessing to. However, we have to look at the income threshold, okay? So for our seniors who have a modified adjusted gross income of $75,000 for those who are single or married filing separately or head of household, A modified adjusted gross income at $75,000 is going to be the threshold at where the deduction will start to be reduced. Now, the explanation of this reduction is kind of clear as mud because it'll begin phasing out at $75,001, right? However, it's going to be reduced by 6% of the modified adjusted gross income. Now, typically, when we have a reduction, we know, okay, it will be reduced by $100 for every 1,000 that is over the threshold. Within the actual bill itself, it doesn't spell out how much it will be reduced by. We just know that it can't be reduced lower than 0. So be on the lookout from updates from the IRS. Make sure that any updates that you're receiving are from a trusted source, such as the IRS directly. If you're a listener to this podcast, I'll be updating you. But I also want to remind you that Tax Tips with Timalyn is coming back. If you're not familiar, this is my personal blog that is on the Bowens Tax Solutions site, and this is for taxpayers just like you to stay informed on different updates. So there are a lot of things that have been left unclear with the One Big Beautiful Bill Act. We yet have to wait for the IRS to interpret it to see how they're going to manage certain things with taxpayers. If you want to stay in the know with those updates, I want to invite you to go subscribe to Tax Tips with Timalyn right now. There's a link below in the show notes. And also, coming in October, there will be paid tiers because there are going to be certain topics that I'm going to dig into a little bit deeper in the coverage because, again, topics like this are nearest and dearest to my heart because of the influence my grandparents had in my life. My parents aren't quite that age, but they're on the brink of being able to take advantage of things like this. So I want to make sure that the proper information is out there from a trusted resource. Okay. So we've talked about what that phase out is going to look like for our taxpayers who are not married or they're married and not filing together. For our married taxpayers who are going to be filing jointly with their spouse, the threshold is going to actually double. So if we have two taxpayers, they're both 65 by the end of the year. If their modified adjusted gross income is $150,000 or less, they can take advantage of the full $6,000. Now check this out. With some deductions, we have a marriage penalty, right? So let's think about the student loan interest deduction. No matter if you're married, filing jointly, or single, the max that you can take is $2,500. That's not so with this deduction. With this deduction, spouse A, if they're 65 and we got a modified adjusted gross income of $150,000 or lower, they get the extra $6,000. Spouse B is going to also get the extra $6,000. So think about this. We have a standard deduction of $31,500 already for our married filing jointly taxpayer. Then, because they're 65, we're going to add that $1,600. So that's taking us to $33,100. Okay, quick math. Then they're going to each get an additional $6,000. So when we add that $12,000 in, we're looking at $45,100 that they are essentially looking at tax-free because remember, they're going to deduct that from their taxable income. All right. So with that, they are receiving some sort of a tax relief because they're not paying taxes on additional income thanks to this part of the One Big Beautiful Bill Act. I'll remind you guys, I'm going to stay neutral on this, okay, and only present the facts. Are there people who are not going to benefit from the One Big Beautiful Bill? Absolutely. Are there people that are going to be so stoked out because of the benefits that they received? Absolutely. And in my genuine opinion, my humble, genuine opinion, senior citizens that are in the most vulnerable state financially are going to benefit from this enhanced senior deduction a whole lot. So again, in my humble opinion, it is a big, big, big win for them. Now, had to check my notes, make sure I didn't leave anything out, right? So we talked about the $6,000 for each of the spouses. Cool, got it. To qualify for this deduction, the taxpayers must have a social security number. With a modified adjusted gross income, keep in mind that that's going to be your adjusted gross income with certain things added back. This changes based on what the deduction is. So if you're curious about what your adjusted gross income was or is, look at line 11 of your 1040. All right, that's going to be your adjusted gross income for 2024, because I know you already got your taxes filed. I hope. If not, and you're behind, book a call with me. We got to get you caught up. You can't be a fan of the podcast and not be in compliance with your taxes, right? You're going to look at line 11, and for this deduction specifically, modified adjusted gross income is going to be any foreign income exclusions added back. Okay. So if you are an expat or you've been working overseas and you qualify for the foreign income exclusion, with that exclusion, that will have to be added back in to figure your modified adjusted gross income. If that's not you, no worries, you're good. You just need to make sure that you have the modified adjusted gross income under $150,000 if you're married filing jointly. If you were filing as any other status, it has to be under $75,000, and you have to have reached the age of 65 by the end of the tax year. Okay. And then you'll be eligible for that enhanced senior deduction of $6,000. Now, I hope you found this information helpful. I hope that you'll share this with your family and friends, because if you found this helpful, then somebody else will too. And you'll help me to fill my personal mission of filling the tax literacy gap one taxpayer at a time. And it would be remiss of me to not say thank you for all of your support of this podcast since 2022. I could not do this without you. All right. So I appreciate you. If you are running into issues with this, you're invited to book a call with me. Remember, the podcast is free. Depending on the depth of knowledge or consultation you need, speaking to me probably isn't going to be free. But if you need help, make sure you get the help that you need, even if it's not with me. I'll see you guys in the next episode. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.